evening, guys. It's Saturday, March 4th. My name is Dave Coker, and this is Talking About Finance. And all right, I gotta tell you, this is the highlight of my week. A time when I meet like-minded individuals interested in financial security. People who engage the markets in a disciplined and productive manner, rather than trying to trade. People who buy assets and hold them. How long, some ask us? Forever. Why would we sell a stock unless the dividend were threatened? After all, we selected the stock on the basis of its cash flow and its yield. As long as it continues to pay, there's no reason to sell it. We're getting paid to hold it. We can collect dividends for holding the stock, and we can use the dividends to acquire more dividend-paying stocks. And heaven forbid, we have a capital gain and then we sell, because then we gotta pay taxes. Guys, I don't like to pay taxes, and neither should you. But while you shouldn't evade taxes, that's fundamentally wrong. You can simply not create what's called a taxable event. Selling to realize a capital gain is a taxable event. And then you got to pay your partner, the partner you didn't know you have, your good guy partner, the government, who's there for the good times only. It's curious how if you pick a stock that goes up in price and you sell, you got to pay taxes. But if you pick a stock that goes down in price, the government doesn't pay you. It's really weird. So why play their game? Just buy and never sell. Sit back, collect dividends, reinvest dividends, get rich slowly. And that's exactly what I did last Wednesday, March 1st. February's dividends were all paid into my account. So I bought more shares of a dividend-paying stock I currently like. I'm currently building a position up in that company using other people's money, dividends. I'm getting rich slowly, and it's the only way to be sure. But to help us do this, let's talk about finance. Last week, the S&P 500 finished up about 1.9% on the week. 5 sectors: materials, communication services, industrials, energy, and information technology all closed higher than the S&P 500. And 6 sectors underperformed the S&P 500 as a whole, specifically consumer discretionary, real estate, financials, healthcare, consumer staples, and utilities. An interesting week with stocks showing resilience in spite of fears of higher interest rates to come. The VIX traded down to 1849, started the week at 2167. I'm not really sure what's up with the VIX. It's signaling complacency in the markets. This is a very dangerous time. I'm sensing an undercurrent of anything but complacency. So be very careful going in here, guys. There's still a good chance of a big market blow-off, with the VIX pushing closer to 40. That signals the end. That has signaled the end of every bear market we've seen for the last 30 years. This time will not be any different. The 10-year note closed the week at 3.96%. It's up about 1/100th of 1% or 1 basis point week on week, flat year to date. And in case you're wondering about equity market performance, I blame government securities. The 6-month T-bill is yielding about 5.13%, so that's hitting stocks hard. Why buy risky stocks and realize a 7% on average return when you can buy fixed income, the risk-free asset, a guaranteed return of 5.13%? Yeah, once upon a time we said, Tina, there is no alternative. Well, now there is an alternative. Oil closed the week at $79.79. It's up about 4.5% on the week, now down about 0.6% year to date. So you guys got to know what I did this week besides buying stocks with February's dividends. Since yesterday was Friday, I bought Bitcoin as Ripple, as one does on Friday. Buying crypto, I'm never planning to sell. I'm buying and I will never sell. It's the same strategy I took for my good big gold and silver trades in 2004 and 2005. I never planned to sell that metal either until soaring prices starting in 2011 had me reconsider. So by 2014, I had sold all my metal and bought 4 houses paying cash. And you know something? I'm gonna do it again. This time with crypto, but yes, those of you who have listened before also know I have a big position in gold and silver as well that I established in March 2019. But, drum roll, drum roll, drum roll, can you hear it? Let's see what me and my buddies, about 50 or so total absolute money freaks, scattered about the world, all talk about during the week on a private Telegram channel. As you know, if money is something you like, then you'll like this something that I'm going to give you. Welcome, my friends, to what we call Global Wall Street. We are absolutely everywhere. And I've got 7 slides for 7 days. So let's go. First up, the money map. Now, this is a very straightforward quadrant system, guys. Horizontally, you got yields, bond yields. To the left, they're falling. To the right, they're rising. Vertically, you got inflation. At the bottom, it's falling. At the top, it's rising. In order to figure out how you're going to direct your capital, take a look at the money map. What are we seeing? Well, we're seeing bond yields rising. We just talked about it. That would favor either growth in financials or commodities. But what's going on with inflation? Yeah, inflation is absolutely stubborn. We'll err on the side of caution and say it's rising, even though it's been dropping, but not significantly, and it's showing signs of spiking up in certain sectors. So this favors commodities and value. Now you know why I bought all this gold and silver. Now you know why I still like property. I do like Bitcoin. I do like Ripple. They sort of plug in there. Where are you going to put your money? Where are you going to invest? It's a big question. It's very serious, so consider it carefully. This is an interesting one, guys. I saw this headline, and the thing that leaped out at me wasn't so much about Mexico as a cheap destination for manufacturing capital. That I've known about for a while. I saw the phrase supply chain friendshoring, and that was pretty interesting. I thought that was an interesting turn of phrase. Now, I've had this theory for many years. I've been talking about this for well over a decade. At some point, we're going to see the United States, Mexico, and Canada merge to form a really, really large country. They have to do it. They already have the economic ties. They have a trading bloc. It's well documented. If you go back and look at history, world history, it's well documented where trading ties are established, political ties tend to follow. And I've said this for about 10 years. Sometimes I've gotten, criticized a fair amount for this view. It's going to happen. Maybe not in my lifetime, but it's going to happen. I tend to believe it. So this is really interesting. Oh, yeah. And check out the big manufacturing companies and watch how they're deploying capital down into Mexico. Very, very fascinating. Here's an interesting one that we were talking about. This is one thing I don't quite understand. So clearly, someone who's a TA person put this out, and they're saying that investors hold on to their thesis and they go down with the ship, blah, blah, blah. Guys, it's not a religion. We can use both. It's not either or. Either you're a TA, a chart trader, or you're an investor with a hypothesis. I don't believe in that garbage. I believe in making money. And to make money, you've got to be flexible. You have to be ready to change really quickly. I would advise you to look at both. I don't know any professional that considers only one. They look at both indicators. They look at their fundamentals. They come up with a hypothesis. And then to enter or exit the position, they use charts, technical analysis, to time the trade. This is just how it works. And we're talking about how it works. This is really, really wild, guys, because in the United States, we've got the luxury. We can actually purchase a mortgage and we can go 30 years. That is wild. And it's really wild when you start to think about this, that if you take out a 30-year note, if you purchase a 30-year mortgage, you actually know today not only what your payment next month will be, or in 12 months, 1 year, or in 10 years, 20 years, but you know what your 360th payment will be. And the media is making a lot of noise about this huge increase in mortgage rates is going to kill the housing market. Well, don't worry about it if you already took your mortgage out. And you can see what we're doing here is we're looking at the primary mortgage market survey. We're looking at how many mortgages have a rate below the PMMS, as it's called, or the PMMS plus 50 basis points. Guys, check this out. It's a huge, huge number of mortgages that are out there. Look at how many are out there at 3%. Look at how many are out there at 7%, less than the 3% threshold. You can see how many are out there below 3%. It's really wild. So no, we're not going to see a huge contraction in the housing market in the sense that all these people with mortgages are going to be selling. They don't have to sell. They've locked the funds in. It's really curious because, I live in the UK, and here you can't pick up a 30-year mortgage with a fixed payment over the 30-year horizon. The big four banks in this country are far too powerful. What they do is not consumer friendly. Now, some tenants of mine, ex-tenants, just bought a property. I didn't ask, but they did not get a 30-year mortgage. They might have got a 25-year commitment of funds with 7-year repayment terms. And guess what? At the end of 7 years, 5 years, 2 years, whatever, you have to renegotiate payment terms. That is not cool. That is radically uncool. I don't like it. I wish they would do something about it. But even though I'm British and I've been here since 97, I'm just a guest in this country. So I don't really criticize it as harshly as I maybe should. But it's really fascinating thinking about, once again, a theme that I've mentioned before. In America, we do money right. And here we go when we're talking about money, we're talking about debt, we're talking about interest rates. This is the Fed's balance sheet. And what we're doing is we're looking at when these notes mature. And you can see there's a huge bunch of maturities, huge bunch of notes that mature in 2023, 2024, $1 trillion plus. What's the problem, you think? The United States can always borrow, you say. Yes, they can. But they have to pay a higher rate. Remember, interest rates now, compared to even a year ago, much, much higher. So either they have to pay that debt back, pay it up, or they have to refinance at a higher rate. And here's a cool one. This is really wild. We're starting to get some clarity, guys, into what's happened with FTX. $9 billion just disappeared. Where did it go? You just don't lose $9 billion. Now, I've said, given the whole vibe around this situation and the people around SBF, I kind of think he's the fall guy. I don't think he's got $9 billion. It wouldn't surprise me if he had orchestrated a way to make maybe $500 million disappear. $9 billion is a lot of money. And there's some people behind the scenes that have really pulled the strings. It'll be interesting to see how this all shakes out. It's a terrible thing because if you had money in FTX, you've lost it essentially. We're going to enter bankruptcy and see how much they can claw back. $9 billion is gone. It's really odd. And there is a lesson here, guys. Whenever you buy crypto, do what I do and what I've advocated for the longest time. You should never leave coins on a crypto exchange. Never. When I buy, every Friday, as soon as I buy, I get those coins off. I push them off to my personal wallet, my ledger device. You need to do the same thing. Get your coins off those exchanges. Get it on a wallet, a hardware wallet preferably, that only you control. This is not why we invented Bitcoin, to have people just looting like this. It's totally, well, I shouldn't say we invented, but not why Bitcoin was invented. We don't buy Bitcoin so some idiots can loot it from us. And this is based upon the halving cycle. And we've talked about this before. Remember, every 210,000 cycles, every 4 years, Bitcoin halves. The the reward rate for mining Bitcoin goes down by 50%. We had our last halving in 2020. The next halving is coming up in 2024. It's in May of 2024. Very nice chart that graphically spells out the relationship between the intra-halving cycle prices and Bitcoin's price over time. This gentleman or gentle person, I'm not sure who it is, really, their hypothesis is we're likely to see 200,000 before we enter the next halving cycle. It'll be really interesting to see how this shakes out. Once again, guys, thanks for your time. Buy Bitcoin. Buy Bitcoin at regular intervals. Buy as much as you can. Set it aside. Never spend it. I've benefited from halving cycles. I'm not going to tell you exactly when I started buying, but yeah, I've benefited from several halving cycles. You can too. Remember, all the Bitcoin's not going to be minted until 2140. We have a halving cycle every 4 years, and there's a sharp increase in price historically on that basis. Have a wonderful week, guys. Buy yourself some Bitcoin. Buy some stocks. Maybe even buy some gold and silver. Just buy and hold and never sell. And get rich slowly. Take care, guys.